Insurance in Illinois is about to explode. You're about to see a fairly large increase in 2024 going into 2025 pretty heavily across the board. Now, this spurred from an article from a company called Insurify where they checked 90 some odd million insurance policies and agencies and all of that, and they've got really good data. And the thing that they're seeing is what's happened in the past, Illinois starting to catch up with everything. And this is something I've been saying in several of my other videos, that a lot of these larger states, the big problem states like Florida, California, Texas, those are the main three. You've got Maryland now, you've got Louisiana, a little bit of Georgia. You guys are the middle problem child, I guess you could call it, where weather is hitting heavy. Things are happening. And what everybody says, we should just spread the risk across everybody. Don't get me wrong, I actually like that idea, but those states, those big states, are the major piece that the weather is causing so many problems. On top of, there's a lot more other things happening in the background. I've got a video I'll link at the end that goes over that. But in general, those states have caused the rates to go crazy as far as those states go. So companies are losing their shirts there. They do what you're talking about. They do share some of the risk across other states. And some of the medium states have increased their rates quite a bit. We're seeing 30% increases here and there. Now, some of the smaller states, at least some of the lesser risky states we'll call them, are starting to follow up with the last kind of rebuttal. So those states like Illinois are seeing some major increases. Now, this article claims there's going to be about a 46% total increase over the last several years. It's already increased about 16% for the first half of 2024, and they're expecting at least 20% more by the end of 2024. First off, you're not going to see this right away. It's not going to be until the beginning or the middle of 2025 before these rates start to impact. Now, some of them may have already been filed, but keep in mind, insurance companies, if they're going to raise the increase of the rate, then they have to file them ahead of time. This takes several months to process, usually at least 90 days, sometimes a couple more months than that. And then the government has to approve it, or the commissioner, and all of the pieces have to happen, and then they raise the price. You can actually look those up. You can ask the company if they filed any rate increases, and they'll usually let you know if those are happening or coming soon. The problem you're going to run into is a lot of agencies don't have access to that data. So if you have a local agent, they could call and find out or ask, but 9 times out of 10, it's a lot of digging. Hopefully, if I see those come through, I'll let you guys know on this channel. But in general, that's the increases that are happening. So 35 to 40 some odd percent is what you can expect in Illinois, and it's about 20% less in most of the other states. So what's causing this increase? There's 3 main pieces that we've talked about in some other videos, but they're starting to play some larger factors in Illinois specifically. One is the inflation. Yeah, that's the smaller piece of everything. A lot of people say that's everything. It's not, but it kind of is, right? It is and it isn't. It isn't in general for the policy directly on a premium. The inflation is not affecting it that much. That being said, the bigger piece is the inflation to the cost of repairs and the inflation to newer vehicles. It's just out there. It's a fact. We are driving newer vehicles now, at least the majority of us. And for those that are carrying full coverage, that's what we're really focusing on here, is those policies to fix those newer cars that have the backup cameras, that have all of these sensors, that sometimes are electric, that have these dual systems. And there's now a Rivian that if you hit the bumper, it was $40,000 to repair it. It was like, because it was tied to the front of the car. And there's all of like these extra really cool things that I like on cars, but in general, they're more expensive. The maintenance cost, just for you to own it, has nothing to do with insurance, is up 30 to 40%. That's across the whole US. That's not even just an Illinois thing. The repairs on it are taking longer, which causes the company to pay more out, especially if rental car coverage, just more days that you're using that. There's $1,000 here, $1,000 there, and before you know it, these agencies have to make up those costs. On top of that, Illinois has become the 5th largest for the most stolen vehicles. That risk alone has put them into kind of their own category of risk. So now they're slowly starting to become not just a medium risk, borderline medium to high risk, because if there's a lot of theft, a lot of vandalism, a lot of weather, like your Floridas and Californias and your Texases and all of that, a lot of those things are impacted by what they expect to pay out in claims. I'll give you an example. The underwriting losses that were reported was $33.1 billion for the prior year. That's a lot of payout, and that was previous. So it's increased from that 33 billion to way more for your specific state. The positive is it's actually decreased about 17 billion over the last year in 2023 from 2022. So the benefit is it's gotten better, and this is what we're talking about. The weather claims we're starting to predict better. The insurance companies have started to find that fine-tuned price where they need to be, to where they're not going to make as much profit, but the customers are still going to be charged enough that's not too much. They're trying to find that happy balance again, and that's starting to play out. So like I said in previous videos, 2024, we've spiked from 2020 all the way down to 2023 and 2024. We're starting to see a little bit of risk being less. So we're seeing less risk going into 2025, and then probably middle 2025 for Illinois, maybe 2026-ish, or maybe a little bit into 2026, you'll see those rates stable a lot better. The unfortunate part is they've passed the national average, and the national average, I hate to say, because I remember making videos years ago that I think the national average was like $1,200 to $1,800, somewhere between there, and now it's $2,300 almost. You're paying, actually it's more than that, it's over $2,400, so you're averaging for full coverage on a vehicle more than $200 a month. If you're paying more than that, then either A, there's something with the record, maybe you have tickets, things that you're unaware of, maybe a driver was added to your policy that was pulled up in the house and you didn't know about it, so check that on your policy, or B, you're just with the wrong company. If you are shopping for car insurance, I'll put a link in the description below where you can do a quote with a local Illinois agent that's licensed there, that works there. I've got several agents that I've worked with, and they can help you at least shop it to see if there are better fits. The first way to fix this before you shop, I would say, in all honesty, go to the agent that you have now and have them evaluate the policy before you start diving in. Don't get me wrong, we want to insure you, we want to quote you, all of those things, but it's not about just grabbing customers. It's about making sure that you're making the right decision. So I would review your policy, make sure you have the right coverages first, then make sure you have all the discounts, make sure nothing had changed from the previous year if you're seeing those rate increases. The one and biggest way you could fix it, it's something I've personally done on several companies just to test them, and I actually do it with my current insurance, is the telematics. It's where it's called DriveWise or SmartRide or Snapshot, all of these different names that these companies have. It's a telematics software. It's basically an app you download or a device you plug into your car, and usually it's a 90-day program where they watch your driving habits for 90 days. They give you some pointers on how to improve them, and if you do well, they give you a large discount. It usually starts off between 10% right off the bat. Some companies never go below that, so that's even a bigger benefit just from having it. Even if you're a horrible driver and you're speeding everywhere and you're driving all crazy, they usually give you 5% to 10% off either way. Keep in mind, not all companies do that, so make sure it's the right fit, talk to the agent, make sure that that's okay. But those telematics can get you up to 30% off. I've seen them a little bit higher than that, but usually average 12 to 20% is pretty common. So that's going to give you that extra kickback to be able to say, without having to change anything on your policy, just test my driving, make sure I'm good, follow the steps, make sure it's all correct, and then now you instantly get that better deal without having to make any changes. The second way to fix that is to reshop. Like I mentioned, there's a link in the description below. You can reshop with multiple agents. I usually recommend an independent agent who works with multiple companies. Nationwide, Safeco, Progressive, Geico, Travelers, all of those companies usually work with independent agents, and there's probably 100 of them, so you can actually go to one person, not have to sell all your data, and you can work with them to find the better fit for what you need as far as coverages go. The third way is to raise your deductibles. It's one of those things that nobody loves to do, but it's more you pay in the claim, the less likely you're going to claim. So the insurance companies are going to give a discount. Before you do that, what I would do is when you're reviewing your policy, whether it's with your agent or not, is to take a look at your previous policy to your new policy, and there's usually dollar amounts to it. The easiest way to figure it out is to look at your deductibles, look at your liability, see how big of an impact it was. If you're seeing a large impact on the liability, usually either they made a change as far as the company goes, or some driver or something has changed on your risk. Could be your insurance score, could be that they added a driver, like I said, they could be the location that you're in got remapped. There's a lot of different things that could have changed, but if that's the case, then dive into that a little bit further. Once you see what's causing that larger increase, sometimes it's just your comprehensive deductible. You can change it, increase it, or remove it if it's not worth it for you, and then it'll lower that by a chunk ton more than you thought it would. And if you're not working with an agent that says chunk junk ton, then you're not working with the right. The last piece you can do, which is just in general, is check the mileage that you're driving, because that also plays a large factor. Now, because the newer cars, the more cost of repairs, the more you're driving, the more risk they have. The more they're on the road, the more risk they have. If you're a construction worker and that plays a factor in your state, because you're most likely going to have glass claims and rock chips and things like that, then if you switch jobs, then maybe there's a better profession. Sometimes there's multi-member discounts that you can get. So if you're an affiliate of some company or a credit union member or a Harley Davidson club or any of those things, that's where those agents come in and start to dive in to find those extra pieces. Again, if that's not the fit, then the company in general, we need to start looking at which company is going to be the best fit for you. If you are trying to figure out what coverages are next, do I have the right coverages? I've got my Car Insurance 101 that's going to go a lot more in depth. Otherwise, this video here is going to be also helpful. I'm Mark with Think Insurance. I'll see you in the next one.